SBI Bluechip fund. What kind of risk this particular fund adds to your portfolio, or what kind of return potential this particular fund has? Let us evaluate and review. Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take right financial and investment decision. Before we move forward to SBI Bluechip funds review, first we have to understand what is large cap category, because SBI Bluechip fund is from the large cap category. Large cap category is an open-ended equity fund. It invests predominantly, that is 80% of money minimum, in large cap stocks. Large cap stocks, as per SEBI's definition, is top 100 companies by market capitalization. 80% of the assets of this particular fund has to be invested in top 100 companies by market capitalization. Balance 20% can be invested in mid cap and small cap if needed. As it is an equity fund, this is suitable for high risk appetite category investors, and the suggested time frame is 5 to 7 years. 7 years and above can be definitely a good period to invest in this fund. Long-term capital appreciation is the main objective of this fund, because this particular category predominantly invests in equity. So equities, being volatile, can deliver negative returns in the short run, but in the long run, like 7 years plus, they are capable of generating capital growth. That is why long-term capital appreciation is their main motive. That means this fund is suitable for investors who has got long-term money, and investors who is looking to invest only for short term should avoid this particular category. Fine. We have looked at the category details in detail. Now is the time to look at the framework based on which we are going to analyze SBI Bluechip fund. We will divide this review into 3 major segments. First, attributes of the fund, key features. Second, we will do in-depth analysis on returns. We will not just look at what is 1 year, 2 year, 3 year return. We will analyze returns in depth. Next, the third segment, we will analyze risk. We will do insightful analysis on risk. We will not just like that say this is the volatility. We have got unique tools to analyze risk. We will see that. Then finally, what are all the major observations on this fund, and if you are planning to invest in this fund, what you should do before you invest. You will see all those things. First segment, attributes of the fund, SBI Bluechip fund. The minimum investment is 5,000 rupees and minimum SIP investment is just 500 rupees. This fund is live from 2006 itself. The benchmark index is PSE 100 total return index, open-ended fund, and 31,029 crores is the total assets under this fund. The expense ratio is 1.63%. This fund has the portfolio turnover ratio as 6%. Category average is 159%. That means the category churns the portfolio 159% times, whereas this fund churns the portfolio only by 6%. That means the portfolio churning happens very less in this fund. This fund believes in long-term investing, believes in buy and hold. This fund does not believe in short-term investing, momentum investing. No, like investing in trending opportunities. No, it is good news for long-term investors. Buy and hold is fundamentally a strong strategy. Nice. The total number of stocks held in this fund is 57. The category average is only 49, but this fund holds 57 stocks. This fund seems to be over diversified compared to the category. This fund is trying to reduce the risk by over diversifying. Over diversification can reduce risk. In the meantime, it can also reduce return. But when we are doing the risk analysis and return analysis, we will find out whether the risk is reduced or return is also reduced. We will analyze. What are all the top 10 holdings? HDFC, ICICI, Infosys, Reliance Industries, ITC, L&T, HCL Technologies, HDFC, State Bank of India, Mahindra and Mahindra. These are the top 10 holdings of this particular fund. Top 10 holdings accounts for 46%. Rest of the 54% is invested in balance 47 stocks. Total stocks are 57. 10 stocks are these, and out of these 10 stocks, 46% is owned. Balance 54% is spread across 47 stocks. So 10 stocks on concentrated, 46% is invested. This looks like portfolio has got concentration risk, but concentration can bring risk as well as bring return. We have to see that, analyze that in when we are doing risk analysis and return analysis. Sector. Top 3 sectors are financial, technology, and automobile. 41% of the portfolio is spread in these 3 sectors only. Rest of the 60% is invested in rest of the sectors. But again, 40% in 3 sector also brings concentration. Whether this concentration brings a return or adds risk, that we have to see later. Exit load in this fund is 1% if you are redeeming within 1 year. If you are redeeming after 1 year, there is no exit load. If you are withdrawing within 1 year, then it is accounted as short-term capital gain and taxed at 15%. If you are withdrawing after 1 year, it is accounted as long-term capital gain and there will be 10% tax on the long-term capital gain. As we have completed the basic analysis on the attributes of this fund, now is the time to start doing the real analysis. First, we will do analysis on the return. We will not just look at SBI Bluechip funds return. We will analyze returns from multiple perspectives, from different standpoints. We will compare it with the different parameters. First, let us compare SBI Bluechip's performance vis-a-vis the respective benchmark index, which is BSE 100. Last 1 year, SBI Bluechip 2.2%, whereas benchmark has delivered 2.56%. But again, like though they have not beaten the index, but they have almost replicated the index return. Similarly, in 3 years, also they have almost replicated the index return. But in 5-year category, there is a huge gap of close to 2%. It is huge. They have underperformed the index by 2%. Whereas in 7-year category, it is almost close to 0.9% underperformance. But in 10-year category, they have outperformed the index by 1.6%, which is good. So 10 years, 1.6% outperformance is good. But whereas in the last 7-year time frame, they have not outperformed the index, even after paying expense ratio and actively investing in funds. SBI Bluechip fund has not outperformed the index. This not outperforming the index, is it temporary or on a permanent basis they are doing it? That we have to evaluate and find out. How this fund is performed within this category, large cap category. In the last 1 year, this is on 44th rank. In 3rd year category, 35th rank. 5-year category, 58th rank. 7-year category, 26th rank. On 10-year category, 2nd rank. Very nice, right? So on 10-year category, 2nd rank. So definitely a good fund for a 10-year investor. But last 7-year, 5-year, 3-year, 1 year, this has not been among the top 10 schemes. So not among top 5 is okay, but not among top 10 in any of these cases. That means there are other competitive funds which are doing well. It is an important negative observation on this fund. Rolling return analysis is an important analysis. This gives you different insights. I want you to focus on just two columns, which is maximum return and minimum return. The last in 1 year category, the rolling return, if we analyze in one particular 1 year period, this fund has delivered 111%. In another 1 year category, this fund has delivered 57% negative return. So short term, this fund seems to be having huge volatility like any other equity fund. So this is what the data proves. In 3 year, 30% positive return, minus 13% negative return. 5 year category, 23% positive return and minus 1% negative return. Whereas in 10 year category, this fund has not at all delivered negative returns. Maximum return delivered by this fund is 18.98%. Minimum return for a 10-year period this fund has delivered is 6.61% return. So investing for a longer period like 7 years, 10 years will help you get positive returns. Best and worst quarter performance. Quarter 4 of 2020, this fund has appreciated by 24%. In one quarter, 24% return. Just 3 months, 90 days, 24% return. Right? So awesome return. But at the same time, in quarter 1 of 2020, this fund has delivered 28% negative return. So in one quarter, this fund can deliver 28% negative return, also capable of delivering 24% positive return. The point I am trying to make here is this fund is highly volatile. This is not only with this fund, any equity fund will have this kind of volatility in 3 months period. So don't just look at past 3 months performance, which has delivered 24%. So like, let me invest money. No, this fund has delivered minus 28% in last 3 months. Let me avoid. So don't take a decision based on just 3 months performance, right? Only if you are comfortable riding these kind of ups and downs for 7 years, then choose this fund. That conviction will give you patience. Based on that patience, you will be able to stay the course for the entire 7 year plus time frame. If an investor could have invested 7 years back just 1 lakh in this fund, the present value is 1,96,000. As an investor, if someone could have started a monthly SIP of 10,000 rupees 7 years back, the present value is 12.5 lakhs. This is the last bit of analysis which we are doing on the returns, that is peer comparison. I have taken handpicked few large cap funds and compared it with SBI Bluechip. Last 1 year return in SBI Bluechip is 2.2%, whereas ICICI Bluechip has delivered 4.96%. Last 3 year return 11.85%, whereas ICICI and UTA Master Share has outperformed in the last 3 years. 5 year 9.84% is the return delivered by SBI Bluechip, whereas Axis Bluechip, Mirai, ICICI Prudential, UTA Master Share all have outperformed SBI Bluechip in the last 5 year category. Expense ratio wise, like 1.63% is a reasonable expense ratio compared to the category average. Assets under management is also definitely sizable, 31,000 crores. So this particular slide makes one thing very clear. There are other large cap funds which are performing better than SBI Bluechip in particular time frame, and those funds are also consistently performing funds. As we have did a complete in-depth analysis on return, now is the time to focus on risk. Most of the times, investors over focus on return and they go out of focus in the area of risk. One thing what we have to remember is return management is not under our control, but risk management is under our control. In that sense, focus on risk and do enough analysis on risk. In that sense, we are going to do in-depth analysis with few unique tools we are going to do. Based on SEBI's Risko Meter, this fund is categorized as very high, very aggressive. Investors can invest in this fund. Investors who are willing to accept very high risk to maximize potential returns over the long term can invest in this fund. These are all the important key ratios as far as measuring the risk is considered. Standard deviation of this fund is 22.08%. That means this fund is highly volatile. Sharpe ratio is 0.43%. That means this fund has got slightly better risk adjusted return. Sortino ratio is 0.52. That means this fund has got better downside protection. Beta of this fund is 1. That means the risk of this fund is highly correlating with the risk of the index. Alpha is minus 0.63%. Alpha is the indication of the additional return delivered by the active fund manager in addition to the index. But whereas this fund has got negative alpha, even after giving the best efforts, the fund manager has delivered negative alpha. That means he has delivered lesser than index return. It is a negative observation for this particular fund. Generally, volatility or the risk is measured based on the standard deviation or beta, but whereas standard deviation or beta predominantly focuses on the total volatility. When the market is going up by 10%, whereas this fund is going up by 15%, it is good for investor. Though it is volatility, it is good for investor. We need not consider that as volatility. We have to consider only the bad volatility. If the market is going down by 10%, but our fund is going down by 15%, then it is bad volatility, right? That we have to measure. That we have to measure. For that, we are introducing few unique tools. We are ignoring here the upside volatility. We are focusing only the downside volatility, which is bad volatility. Based on that, we are sorting all the large cap funds. Top 25% is high risk. Next 25%, which is in the upper middle quarter, right? That is also considered as riskier. But if the funds are in the next 25%, which is third quartile, lower middle quartile, or in the bottom quartile, these two quartile funds are having less bad volatility, which is good. So when we compared this particular fund with other funds bad volatility, the last 3-year, 5-year and 10-year category, this fund has got fallen into lower middle quartile. That means this fund has got lesser risk than 50% of the funds, bad volatility wise. And in 15-year category, this fund is in the bottom quartile of bad volatility risk. That means this fund has got less than 75% of the category average bad volatility. So bad volatility, downside protection wise, this fund reasonably plays a very good role. I have one more tool to measure the risk in a unique way. When the market goes up, how much of that upside this fund actually captures? When the market goes down, how much of the downside this fund actually captures? When the market goes up, they have to capture maximum. When the market goes down, they have to capture minimum. In the last 1 year, up market capture ratio is 99, down market capture ratio is 95. But in 3-year, up market capture ratio is 102, down market capture ratio is 76. 5 years, 97 is the up market, down market capture ratio is 83, which is good. 10 years, 99% is the upmarket capture ratio. They have almost captured the upside, but downside, they were very defensive, 78% only they have captured. So the downside protection of this particular fund is very good. That is why the total capture ratio is more than 1. And in 3-year category and the 10-year category, it is 1.35 and 1.27%, which is very good in this particular category. Fine, we have analyzed the risk also in detail with insightful analysis on, especially emphasis on the bad volatility and downside capture. We analyzed. There are some important general observation outlook on this fund. Though this fund is in large cap category, it is a very diversified large cap. So this fund is suitable for people who are comfortable taking the risk. Compared to mid cap and small cap, this fund will be more stable fund. This fund has got 16 years track record. This fund, though in 10-year category, has outperformed index. The last 1 year, 3 year, 5 years struggle to outperform. It has underperformed the respective index. There are other peers which are outperforming this particular fund. All these things are like a few of them are negative observations. The time frame suggested to invest in this fund is 5 to 7 years. Past performance is not guaranteed. Past performance is taken just to analyze and judge the performance quality of this particular fund. Before investing in this fund, you have to check your financial plan and find out your financial goal. For your financial goal, do you have long-term money, whether this particular fund is suitable? What kind of risk tolerance you have got in your financial plan? For your risk tolerance, whether this particular fund is suitable. These two questions are to be answered. Maybe by consulting your financial planner, you will be able to get an answer. Also, one more important thing you have to answer with the help of your financial planner or investment expert is overlap ratio. You may already have few mutual funds, you may already have few stocks in your portfolio. By adding SBI Bluechip fund to your portfolio, what kind of additional diversification you are going to bring? Are the same set of stocks owned by other mutual funds and which is there in your direct portfolio, you are going to add by buying this fund. So you have to avoid overlaps, right? Otherwise, you will be ending up buying same set of stocks through different schemes. That we have to avoid. So all this analysis your financial planner will be able to do and suggest you. So take a help of your financial planner. Do you have any questions related to this particular fund or any other fund or other investment options or anything related to your financial goals? Feel free to book an appointment with our certified financial planner. The link to the free appointment is given below in the description of this video. We regularly organize insightful investment webinars with the help of eminent investment experts. If you want to participate in the upcoming webinar on wealth creation and achieving your financial goals, understand techniques to create long-term wealth, then feel free to book another link which I have given below this video in the description. Just leave your name and email ID. We will book the seat for the upcoming webinar and share the invite to your email ID. Hope you like this video. I'll again meet you in yet another useful video. Thank you. Bye-bye.